Before we get into this week's market analysis, I thought it would be fun to play a little game, a little challenge between two different stocks. I want you to pick which one you think will do better. So the two stocks that we're going to focus on this week are PYXS and SOUN. Now they're two very different companies. One is in the artificial intelligence space and the other is a oncology stock. Which one is going to do better depends a lot on the pattern that comes into the day as we look at it. So what I'm going to do is analyze each of them for you. We're looking for short-term performance. Which stock is going to do better over the next 2 weeks? And I'd like for you to type in the symbol that you think will perform better. All right, so let's jump into the Stockscores website. Here is the chart of PYXS. You can see that it had a big run to the upside in the last few weeks, the big run there, and it's pulled back and is breaking the pullback. So that's the daily chart of PYXS. Then we're going to look at SOUN, which is similar in that it also had a big run higher, but it had a longer pullback and then came alive this week as well. The characteristic that's most important of each of these is the abnormal volume. You can see it there on SOUN. And if I look at PYXS, you can see abnormal volume here. Now, to help us answer the question, which one's going to do the best over the next 2 weeks, we should also look at the shorter term intraday chart. So here's the 10-day, 30-minute chart. And you can see that PYXS went up, it broke its downward trend or upward trend line, pulled back, and has started to base and looks like now it wants to go higher again. Compare that with SOUN, which is the artificial intelligence stock. Looking at that on a 10-day, 30-minute chart. And we had the abnormal action, the break back, and the break of the pullback. So one more look. We're going to look at the 2-day chart. Let's look at the 2-day. Here is SOUN. It has some rising bottoms, but kind of fell off into the close on Friday. Actually, let's make it a 5-day chart. Fell off into the close on Friday. So you had downward trend line, broke the downward trend line, starting to reverse momentum. Very similar setups, but still different in some ways. There's the 5-day, downward trend line, broke the pullback, starting to build. So the question is, which will be the hotter stock over the next 2 weeks? SOUN or PYXS? I think they both have good potential. I think both are very volatile, and therefore risk management is essential. If they don't work, you have to get out if it penetrates your stop loss point. My feeling is I'm going to go with PYXS. PYXS I think will do better, but it's a bit of a coin flip. By no means am I certain about that. Which one do you think will do better? Leave your comment in the comment section below. Just type in the symbol that you think will do better. All right, now let's get into this week's market analysis. The market stabilized quite a bit. We are going into our next earnings season starting this week after the Easter long weekend. And so we had some good basing that has been underway, particularly in the large cap stocks, although the small caps are starting to catch up as well as that banking drama seems to be getting a little bit more forgotten. So here is the 1-month chart of the S&P 500. And you can see here that the trend is up. The buyers are in control, a little bit overbought, pulling back, but I think that this is a bullish chart in the short term. Look at that 3-year weekly chart, and you can see that the downward trend from 2022 has been broken. We're now building rising bottoms, and will we break out of this pattern? If we do, the market should move higher. If instead we break down through the upward trend line, then I'm going to be a little more cautious. How about Canadian stocks? T.XIU is the TSX 60. Let's look at the 1-month 60-minute chart there. And you can see it's broken its downward trend line and it has rising bottoms, but there's quite a bit of resistance here, which limits upside. So I would say that that is a little weaker than the S&P chart. I would rate that neutral. On the 3-year weekly time frame, similar situation. We're sort of stuck in the sideways range with limited upside. So I think that's a neutral chart. All right, how about commodities? Let's take a look at the small cap stocks first in the US. Here is the 6-month chart, you can see it's not as strong as the S&P, and that's the banking crash, I guess. There's a lot of these small banks listed in the Russell 2000, and that is weighing on this market. There are pockets of strength in this market. I sometimes like to look at the biotech sector. It has improved this week, and a lot of good trades come from the biotech sector. Of course, one of our stocks to consider for this challenge between the two stocks this week, between SOUN and PYXS, PYXS is in the oncology space or biotech sector, and that sector seems to be helping as well. All right, let's move along to the gold chart, GLD, 1 month. Buyers are in control. You can see the bottoms are rising, so therefore that is an optimistic chart. How about the long-term 3-year chart? Looks pretty good too. We're just starting to break through this resistance. The issue is we've got this resistance right there, so there's not a lot of upside. So I think if you're in gold stocks, they are holds. I would only maybe day or swing trade in the short term on the buy side, but I wouldn't initiate new longer term positions right now because of that longer term resistance. Now, oil's had kind of a crazy chart the last little while. Let's take a look at the 3-year weekly first, because as you'll remember, I called a bit of a negative breakdown when it did that, because it was also breaking the upward trend line. And then OPEC has come out and surprised the market with a cut to production, and that has defended oil prices. So where this was bearish, I'm now going to call this a neutral chart on the long-term time frame. Let's take a look at the 1 month 60-minute chart, and you can see the nice comeback on that cut of production by OPEC. It seems like the market was predicting that because we were moving up, and then there's the announcement of the production cut. That always happens. The market tends to predict the news before it happens. It's kind of a neutral chart on the short term. Let's move along to interest rates. TBT has an important breakdown this week. You can see here we've had these falling tops building, and then this week we're breaking to a little low point through support, and the upward trend line has been broken. So that tells us that the market is predicting that interest rates will not go up as much as they have been expected. And that could be supportive for stocks, and I think it's one of the reasons why stocks have started to stabilize. Now, if you look at the shorter term chart, here's the 1 month, and you can see the trend is down for interest rates, so that is also bearish. But when we say bearish for interest rates, what that means is that we think interest rates are going lower. If we think interest rates are going lower, that's actually supportive for stocks. So just keep that inverse relationship in mind. All right, how about some currency charts? Let's take a look at the US dollar, UUP. And we'll start with the 1 month. What's the trend? Down. Sellers are in control, so the US dollar going lower. How about the 3-year weekly chart? Well, we haven't broken the upward trend line yet, but we're real close. We've built a falling top, and I think there's a good chance the US dollar is going to move lower. And that works with the expectation that interest rates are expected to fall. And I want to be clear again, this is not what the Fed does in the US. This is what the bond market predicts in the US. So the bond market had expectations for higher interest rates, and now the bond market's saying, well, maybe we overdid it. Maybe interest rates are not going to go up as much as has been priced in. And so you're seeing that bond market move up, which means interest rates move down, and that means the US dollar also moves down with lower US interest rates. All right, let's take a look at the Bitcoin chart. I know many of you like crypto, and I think the chart looks pretty decent in the last little while. You can see we had a nice move to the upside. We're now building a foundation. This is a pattern called an ascending triangle pattern. And if we can break out through that, then Bitcoin is likely to move higher. That's a 1 month, 2-hour chart. What about that long-term time frame? Here you can see a decent picture as well. The downward trend was broken. We've built a rising bottom, and then we broke higher from a rising bottom. So that also points to a potential higher move for Bitcoin. So let's get into my ratings then. On US stocks, long-term neutral, short-term bullish. Canadian stocks neutral on both time frames. Gold neutral long-term, bullish short-term. Oil neutral on both time frames. US dollar neutral long-term but bearish short-term. Bitcoin bullish on both time frames, and interest rates for the first time in a while bearish on both time frames. Now let's take a look at the day trade of the week. This is a trade that we looked at in the active live service from Stockscores, and you can take a look at this chart here and see that there's some dots, pink dots, yellow dots. What we look for are the pink or yellow dots breaking from predictive patterns. So this is a 1-minute chart on a stock CDLX that was quite active and abnormal the last little while. And then what we'd like to see is these breaks from patterns. So there was one here and there was one here. And these are strategies that I teach in the Active Live course. We have some live training coming up in April. Make sure you check out some of the other videos on the Stockscores YouTube channel from the past week, because I talk about different ways of trading the market, investing, day trading, common mistakes that investors make, and of course, an overview of the different tools and training options that we have at Stockscores.com for those that aspire to be a professional day trader or just want to manage their money better. So in the sense of the day trade on CDLX, I felt like this was the best entry right here and support right there, and it ended up moving up a nice multiple of risk on a rather slow day because of course we had a long weekend coming up. So I'm going to try this again. My computer took away my lines on me. So it got up to 1 times risk, 2 times, 3 times, 4 times, and closed the day at about 3.5 times risk. What that means is if you risk $1,000, this trade made $3,500 on Thursday. If you risk $100, then it made $350. The risk is the difference between your entry price right here and your stop loss price down there. So that constitutes risk. All of these concepts I went over in the day trading webinar this past week. That was on Wednesday. But again, if you go to the Stockscores YouTube channel, make sure you subscribe to the channel. It's free, and there's all kinds of great videos there that'll help you be a better trader. Well, I hope that you've enjoyed this week's Market Minutes video. If so, click on the like button, subscribe to the channel, and most importantly, trade well.